contrarian, leave it to contrarian badass Reggie Middleton. He called the housing crash, he called the collapse of Bear Stearns and Lehman Brothers, and the crisis in the Eurozone banking system. Reggie Middleton.
About capital markets and markets in general. A lot of people have been asking me, well, how about fees, or how do you gain access to XYZ? Be aware that we are creating an entirely new form of capitalism, at least market capitalism. We are taking exposures, potentially investment exposures, but many other type of exposures that were normally purely the purview of Wall Street financial institutions, and we're automating it and recreating it as software. Okay, fully autonomous software that lives up on a blockchain on its own. So you purchase Veritas to gain access to these software pools. These software pools grant you exposure to S&P 500 index, 10-year treasury yields, 10-year treasury principal amounts, 10-year treasury total return, the Northwest Pacific electricity index, a variety of exposures. Okay, by gaining access to these exposures, your capital goes up with the basis point by basis point with XYZ exposure, and it goes down the same. You could go long set exposure, you could go short set exposure. Okay, you can mix and match several different exposure pools. This is all totally software driven. This is all passive, right? Index driven. There is no manager actively, buying and selling stocks, bonds, or even exposures within each pool. Now, with that being said, an active manager who sees value in Veritasium and the Veritasium platform can buy Veritas and advise clients to say, you want 10% of the S&P 500 index pool, you want 5% of the LSE pool, you want 4% Bitcoin long exposure, 2% short Ethereum exposure, and build a portfolio like that. They can charge any type of fee they want on top of it, or any users could go and gain this exposure directly. The actual pools themselves, because they're autonomous software, will only charge whatever it takes to keep them running. In other words, there will be no management fees or administrative fees to third-party administrators, or 12B1 fees, or BS fees, or nonsense fees, or extra fees, or hidden fees, etc. So what we're doing is we're taking the typical Wall Street business model and we're turning it sideways. And then I thought about it, why turn it sideways? We could turn it totally upside down, put it on its head. So the more advanced applications, we will actually charge through Veritasium peer-to-peer contracts, okay, aggregation contracts. These contracts will be charged by the complexity of the contract, or the fees will be charged by the complexity of the contract. So you can potentially have a plain vanilla pension fund pay almost no fees at all, regardless of whether they're managing $400,000 or $40 billion with the capital, right? All through accessing through Veritas. Very, very interesting concept. By charging by complexity and not assets under management, or not the aggregate or gross amount of exposure or capital, you again totally upend the business model of Wall Street. You charge people for exactly what it is they are getting, and you increase the viability and the value add of actual advisory work. So if everybody can access the exposures on their own for free, or you could have a low-cost manager put exposures together for free or for a low fee, then you have the true value add, those who can actually pick stocks, find those entities to short, go look at the global macroeconomic situation, that's a strong buy, a strong risk, create a hedge, do whatever you want, and they can charge directly for their services, either through Veritas or directly to the client. Again, a totally new way of doing things. Welcome to P2P Capital Markets.